Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. Today's podcast is sponsored by the Great Outdoors. Today we're going to talk about the stock market, who's buying, what's going on behind the scenes, as well as the importance of gold and silver. NASDAQ 100 reached an all-time record high last week. I don't think it was because of fundamentals, though. As you can see, the S&P bounce correlates directly to the Fed's balance sheet as it tops $7 trillion for the first time. This includes high-yield bonds, stocks, even stocks straight out of an index. It's unprecedented. You're witnessing the greatest 51-day surge in stocks since June of 1933. And yet 73% of that is the Fed's buying out there. So you got to know who's buying. It's not a recovery. Airlines exploded in price late last week. That was pretty interesting. And it wasn't for any other fundamental reason. It was because of the speculation from Robinhood. So you can see that 4 airline stocks, American, Boeing, Delta, and United, all these equities holding the top 12 positions within Robinhood, which is a trading platform that a lot of millennials use. And so this is highly speculative. A JP Morgan analyst chimed in and said that investors appear to be confused on American Airlines today, which goes perfectly with a quote that Jay Powell said. He's the federal chairman. He said back in 2012, I think we're actually at a point of encouraging risk-taking, and that should give us pause. Investors really do understand now that we will be there to prevent serious losses. And it's not that it's easy for them to make money, but that they have every incentive to take more risks, and they are doing so. Meanwhile, we look like we're blowing a bubble, resulting in big losses when rates come up down the road. You can almost say that that is our strategy. A lot of people have been desensitized or trained to think that things are just going to go right back to normal. So of course, if the feds are just bailing out everybody, why wouldn't you be speculative and invest now while there's a dip? Problem is when those companies go out of business or when shareholders are wiped out in bankruptcy, those people won't be around. They don't understand that part. So trade accordingly. So silver is above $18 with gold and silver rising for the third day in a row. Meanwhile, you have speculators that are dumping gold, which may actually be bullish. This is from looking at the futures for alleged jewelry demand. So the price of gold ought to be falling, but it isn't. So exploring kind of why this is happening with the price of gold. So according to the World Gold Council, demand for gold jewelry in 2019 fell 6% overall to 2,100 tons. So how did this affect the price overall? The price of gold didn't follow the marginal jewelry usage. So we saw record high jewelry demand in 1999 and 2000 that it coincided with a 20-year bear market in gold prices. So we can kind of conclude that the source of gold has to be far more important than jewelry and industrial components. Gold right now is actually a reflection on the faith in central banks. So people that believe in central banks have everything under control, the price of gold would fall, but that's not what's happening. On top of that, we're starting to see another gold shortage. So as companies are going out, repatriating their gold, buying even more gold, that's causing this FOMO. Then you have a lot of the refineries, the federal mint, the Swiss mint, the Canadian mint, all shutting down due to the virus. Then you have speculators. So as I just showed you, there isn't really a recovery when 73% of the equities are being bought by the federal government. So this whole V-shaped recovery is basically just printing money and then buying stuff with it. Of course, I showed you that the Swiss central bank also owns billions of dollars in Facebook, Alphabet, Amazon, Microsoft, and it just doesn't stop. If the recovery does happen and 25% of the restaurants don't come back, and the ones that do can only have 50% maximum occupancy, what are we going to have? Are we going to have robot bartenders? Are you going to have contactless pickup? What type of dining experiences are you going to have when you can't really interact with anybody? So it's going to have more of an impact, I think, than people really understand. Again, we haven't had that financial impact yet. We haven't had a supply chain disruption yet. So when those do happen and the Feds stop buying, or if other governments stop buying our bonds to perpetuate this printing of trillions of dollars, once that happens and the other leg drops, I think that the importance of gold is going to become even brighter at that point. But invest wisely. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.